All right, guys, welcome back. What we're going to do is we're going to now look at dollar cost averaging. Those of you who have gone for a toilet break, quickly come back. And if you are having a drink, just join in, yeah? Just join in because we have plenty of learning to do. I'll tell you later on, Mr. Kabanda's session would be very, very mind-blowing to you. Because once you know the fundamentals and then you know how to use the signals, it takes you to a whole different level. It takes you to a whole different level where you become a super trader. Yeah, all this while, yeah, you may have moved without the necessary information, but today after this session, I believe many of you are going to go and become incredible. Yeah, let's talk about dollar cost averaging next. Dollar cost averaging. This is the key on the basis of how our robot actually works. Yeah. So I'm going to give you guys an idea about how dollar cost averaging works. So what I'm going to do is I am going to go back to our whiteboard. Okay, where is our whiteboard? Okay, here is our whiteboard. Okay, let me go back to our whiteboard and I share this. Okay, can you see my whiteboard, Prakash?
Yes, Robert. Can.
Okay, great. Let's start with this, right? So what we're going to do is we're going to learn a little bit about dollar cost averaging. You've heard this word many, many times. Dollar cost averaging. For some of you, this may even be repetitive. It's okay. It's okay. Yeah. Just go through this. We're going to learn this together. Okay. Dollar cost averaging. Now, suppose this is you. Okay. This is the handsome, pretty, beautiful you. You have $1,000. Yeah. You have $1,000. Okay. You have $1,000. And you are interested to trade in cryptocurrencies. Yeah, you want to trade in cryptocurrencies and you saw a beautiful crypto. The name of that particular crypto is XYZ. Okay, that's the name of that crypto, XYZ. I'm just making this up, guys. XYZ, yeah? XYZ. That's the name of the crypto. And you want to be a trader. You want to trade and you want to make 2% profit. That's your goal. You want to make 2% profit. Let's take a look at this. Yeah, now you have $1,000. Yeah, so you have $1,000. Quantity. Number of coins you want to buy. Number of coins you want to buy. Let's say the price of the coin. Yeah. Quantity, I'll just write here as Q. Let's say the amount you're going to spend. Yeah. The amount that you're going to spend on this coin as A. Amount as A. Let's do this. Yeah. The quantity. Let's say you go and buy one coin and the price of that coin, let's say it's $100. You have $1,000. Yeah. You have $1,000. You went and bought one coin for the price of $100, the current market price of this coin. Okay. So what is the average price of your coin? Average price of your coin. Average price. Average price is like this. Yeah. Yeah. Take this amount A and divide this by the quantity Q. Okay, that's your average price. So your average price is now $100. Very simple. 100 divided by 1 gives you 100. That's your average price. Now, you want to make 2% profit. You want to make 2% profit. What does that mean? When do you sell? When do you sell? When the price goes up. When the price goes up by 2%, that means once the price is $102, you want to sell it off. So your price to sell is 102. That is the goal. Yeah, but the thing is, suppose the market was not kind. Yeah, market is not your friend and the price went down. Let's say the price went down. Okay, you bought it at $100. You bought it at $100 and suppose the price went down to $50. Okay, the price went down to $50. Now you have two choices, guys. You have two choices. One, you can wait. You can wait so that the market eventually, you know, it fluctuates, goes up, goes down and whatnot, and comes back up to 102. At that time, you can sell. You can wait. It may take a bit of time. You don't know how long this is going to take. You can wait. Yeah, you can wait. Or we do something different so that we can go in and make our profit. After all, we are traders. We want to go in and make our profit. Am I right? So how do we do this? So I've spent $100. So I now still have $900 with me, which is great, which is great. So what I want to do, I want to go and buy more. Yeah, goes counterintuitive. Price is going down and then we are buying. Why are we doing this? Okay, take a look at this. How many coins am I going to buy? I'm going to buy double the amount I bought earlier. Earlier on, I bought $100. Now I want to buy for $200. Okay, I want to buy for $200. I want to buy for $200 and the price per coin now is $50. So the number of coins I'm going to get is 4. Okay, that's the number of coins I'm going to get because the price is $50 and I'm buying double from what I purchased earlier. So now I have 4 coins. Correct? 4 coins. So what is going to be my average price right now? The average price right now is, look at the formula, the total amount I spend divided by the total number of coins I have. Anybody can calculate this for me? What is my average price? Come on, guys. Can somebody calculate and let me know what is my average price in chat? Okay, I see that some of you are already giving me the correct answer. Divyansh, well done. 60. Yeah, AR 50. No, that's not the answer. Divyansh is right. 60. Rochelle 69. How did you get 69? Yeah, Zuraida 50. No, 50 is not the answer. The answer should be 60. Yeah, the answer should be 60. Why? Why 60? Because the total amount spent is 300. Can you see this? 100 plus 200 is 300. And the number of coins I have is 1 plus 4 is 5. So my average price is 60. So my average price over here is $60. Remember, guys, this is the total amount you have spent divided by the total quantity of coins you have. Q is quantity, A is amount. Okay, now the price is 60. This is the current price. Let me just change my color and I'll show you this. This is the current price, yeah, $50. And once we have bought these 4 coins and we have spent this $200, our average price has now become $60. We are here right now. $60, okay, $60. So as you can see, if I didn't buy, my average price would have been at the top over here. But since I bought, I have now brought my average price closer to the current price. Can you see this difference, this gap? This is known as the floating loss. This gap, the gap between the current price and the average price is known as the floating loss. Now, I still want my 2% profit. So what do I have to do? Now, all the market needs to do is move up 2% above this. Just move up 2% above this. That means $60. I want 2% profit. That would be how much? Yeah, how much would that be? 60 times 1.02. That means at $61, and 20 cents, I can actually sell off all my 5 coins. When do I sell? I sell it at 61.20 because I'm targeting 2% profit. Can you guys see this? Yeah. So I don't have to wait until it goes to 102. I can sell it off at 61.2. So my waiting time is lesser. The journey that the market has to make is shorter. I can make a higher profit as well. Look at this. If 61.2, I sell all my 5 coins, how much will I make? 61.2 times all 5, I will make 306. My total sales would be 306. So my profit would be $6 because I spent $300 earlier. Profit is 6. If I had waited, I would have waited a longer time for me to make $2 profit. Can you guys see that? Yeah. So I make a higher profit in a shorter time frame. Now that is dollar cost averaging. Okay, now once I have bought this, my price may go up or my price may go down. Now here's a challenge for you guys. Yeah, I want you to calculate this. Suppose instead of the price going up, okay, the price kept on dropping and the price dropped to $25 now. Okay, $25, and I want to buy more. I want to buy double of what I bought here. Okay, that means I want to buy for $400. Do I have $400? Earlier on, I spent another 200, so I have 700. I want to buy double. Okay, I'm going to spend another 400 here. Now I have balance $300. I'm going to spend 400. How many coins will I get, guys? How many coins? Now the price is 25. How many coins? Anybody can answer in chat. How many coins? Do your calculation. How many coins? Yeah, 400. The price is now 25. How many coins? 400 divided by 25. Yeah, yes, some of you are giving the correct answer. The answer is 16. Well done. So what is the average price? Come on, guys. What is the average price? Can someone calculate for me the average price? Yeah, 700. Put it in chat. What is the average price right now? What is the average price right now? Come on, guys. Very simple. Total amount divided by quantity. Total amount divided by quantity. What is the average price? Yes, Lakshmi, you guys got it right. Positive Media, you got it right. Zuraida, you got it right. The average price here is 33.33. Okay, 33.33. So what actually happens is, okay, over here, 33.33, that's the answer, yeah, which is right. Some of you gave it right. So what actually means is, now our average price has moved here, no longer here, no longer here. This is our average price. Prakash, is my writing still visible?
Yeah.
Okay, great. So this is my average price. Market price is 25. Our average price is 33.33 over here. So this gap, this is known as the floating loss. So all we have to do is wait until the market comes up 2% from this. Yeah. So 33.33 times 1.02 at 33.99 of 34. I can actually sell it off. At $34, I can sell it off. Okay, at $34, I'll still make my 2% profit. So at $34, if I were to sell it off, I'm going to sell all my 21 coins. $34 times 21, 34 times 21 gives me 714. 34, this is the price I'm going to sell. I have 21 coins. 34 times 21 gives me 714. I spent $700. So this time around, I can make $14 profit. So the deeper we went, the more profit we could actually make with dollar cost averaging. And we are also able to sell whatever we bought earlier and get a higher profit. That is dollar cost averaging. The limitation to dollar cost averaging is what? Anybody knows? What limits how deep we can go? What limits? What is the limit? What actually limits us from going too deep? Yes, you are right. You are right. So it all depends on how much capital you actually have. This is the reason why you have to manage your capital well, because when the market is moving against you, you must know, yeah, when to buy. So we have to do our settings right. And sometimes we also look at the way the chart is moving. Dollar cost averaging, guys. I hope this simple explanation made sense to you. How many of you enjoyed it? Guys, we're done with dollar cost averaging. How many of you enjoyed it? Did you like it? Did you enjoy it? Did you learn from this? Yeah, did you learn from this? Lovely, lovely, lovely. Simple calculation, yeah. I'll tell you, when all of this started, when ROYALQ started 18 months ago, I had no idea how to do this. Like what leader Julius Kabanda was sharing earlier, yeah, we had no idea what the heck we were doing. It was all experimental, you know, and we were burning money like nobody's business. We made some money, we built a network, we made some money, and we go into the trade and we get into floating losses, and we didn't know what to do. It took a bit of learning. And we were consistent and we went through it, and now we know. So like for me right now, I'm recovering all my floating losses from before. There are ways to do this. There are techniques to do this. You guys are lucky, yeah? You guys are lucky because you are able to learn from our past mistakes. So I really wish this benefits all of you in a big way, and hopefully all of you make a ton of money out after this. Yeah, dollar cost averaging. Guys, anybody want to share? Leader Kabanda, Leader Nazrin, Leader Prakash, anybody wants to share anything? Dollar cost averaging, guys?
Dollar cost averaging is not something new. It has been used by traders for years and years, for 20 years, 30 years. So it's nothing new, but if you can just understand the basics of it, it will help you a long way. Yep, over to you, Robert.
Thank you so much. Thank you so much. Leader Kabanda, you want to share anything?
Thank you so much, Robert. Maybe this is one of the humbling things I've ever met in my life, that you shift into a business with zero knowledge. You start learning things that have taken people so many years to understand. And for this training, I can't know how many times I can thank you, because you invested your money, had a bad experience, and you're providing a solution. This is one of the amazing things that you are providing. But basically, like I've said, dollar cost averaging, I learned it from you, by the way, when I attended some of your trainings.
Oh.
I was just hearing it, people say it, people talk about it. Because I was not a trader, yeah, I just saw how people make money with a robot, and I just got in like everybody else. But from your trainings, now I understand how I can use my money better. 1, 2, get out of a trade faster, according to what I've shared with that, because it gives you the power to get out of the trade faster. So there are no times of staying into trade for a long period of time. Even if I start with as low as $15, I know myself that if the market goes against me, even in the one short trading strategy, I can be able to buy, get out faster. So that's why maybe sometimes people go into trade and they say, but Julius, why is it that I'm not getting out of a trade? It's because they're not using the principle of dollar cost averaging. They enter the same price and just think like the market will start from here and it will take one road like a train, and it will just give me the profit. But if someone understands that the market is not your friend, like you said, it always come down, then uses dollar cost averaging method and perfectly keeps on getting more coins, more coins. So like dollar cost averaging method brings out the understanding that as things get cheaper, you get more. Things get cheaper, you get more. Coins get cheaper, you get more. Assets get cheaper, you get more. And as you collect more, even when you want to get out of the market, it's much more easier than you pressing all your funds at once with a mindset of, I'm going to hit this big time. So thank you so much.
Thank you, Leader Julius Kabanda. Yeah, all the way from Uganda. Guys, here I have some messages from, who's this? Silver Godwin. Yeah, Silver Godwin. This recording is being, this training is being recorded, Silva. So if you don't understand something later on, once we publish it, you could also go and revisit it. Yeah. So because Silva wanted me to repeat the calculations. And another thing, this is for you, Leader Kabanda Julius. This is a special message for you. This is from Joseph M1. Joseph M1, I think. Joseph M1. Yeah, this is the message. He says, please help me to send a thank you to Leader Kabanda. He has done us better in Uganda and Africa at large. Power to him. This is a message for you. Wow, that's amazing to be appreciated in such a manner.
Thank you, Joseph.
Lovely.
Thank you, Joseph.
Yeah, lovely. All right, guys, we have done topic number 6, dollar cost averaging. Now we're going to talk a little bit about topic number 7, which is what is Martingale? Yeah, we've heard of this many times. Yeah, what is Martingale? What is grid? Yeah, 7 and 8. So let me get back to my whiteboard once again. Okay, let me get back to my whiteboard once again. Let me clear all of this. Yeah, and let us take a look at what is Martingale. Martingale is very simple, guys. Yeah, Martingale is exactly dollar cost averaging being done many times, yeah, on a downtrending market. That's Martingale. Simple as that. Yeah, whenever market goes down, you're buying, market goes down, you're buying, market goes down, you're buying, market goes down, you're buying. That's Martingale. The objective of Martingale is this. Guys, remember this, huh? Objective of Martingale is to close the whole position at one go. Yeah, close position at one go. Close position at one go. That's the thing. Every time you're buying, you get an average price. You buy here, that's the average price. Then you buy again, you get a new average price. You buy again, you get a new average price. You buy again, you get a new average price. So the objective of Martingale is to sell everything you bought at one go. That is Martingale. Martingale in ROYALQ, pure Martingale is what we mean by whole warehouse. There's a setting called whole warehouse. Whole warehouse basically means pure Martingale. All right, guys. So Martingale is when you are buying, when the market is going down. Yeah, we're doing dollar cost averaging. We're getting a new average price. And the objective is to close the whole position. Open position means buying some crypto. Close position means selling everything off. So the objective is to close the position at one go. All right, guys, that is Martingale. Anyone has got any questions on Martingale? Anybody? Yeah. Anybody? Where can I get this recording later on? The recording is not yet completed. Once it's completed, then we'll let you know where to get it from. Yeah. So no problem. Stay in touch with your leaders. Yeah. Right. Great. So anybody, is it clear what is Martingale? Guys, yes. Is it clear? What is Martingale? Yeah. So earlier on, remember, as the price was going down, we are buying, price was going down, we are buying, price was going down, we're buying. That is Martingale. Hope that is clear. So our robot, guys, is not a pure Martingale robot. Yes, if we choose whole warehouse, robot will behave as a pure Martingale bot. But the thing is, we have sub bins. Our robot can also do grid. So what I'm going to do next is I'm going to talk about grid. What is grid? Yeah. What is grid trading? Let me share that with you guys as well. Next, yeah, this is topic number 8. Let's go and talk a little bit about grid trading, and I'm going to go back to the whiteboard. Here we are. Okay, let me clear this. Okay, and we're going to talk about grid boards. Yeah, grid trading. Okay, what is grid trading? Grid trading works like this. Okay, grid trading works like this. There will be two prices. We have the low price, the low price. Sorry, the low price should be at the bottom. Let me just erase this off. Erase this off. Okay, let me just draw this again. We'll have two price, low, and we'll have another price called high. And what happens is between this low price and the high price, we will create bands or grids. Okay, these are all grids, and it all depends on how much capital we have, how much we want to space these grids. Okay, there should be a spacing, certain percentage. We can set this up. Yeah, usually the grids in the exchanges, you can't set the spacing. Yeah, the grids would be auto set usually in the exchanger grid boards. But in ROYALQ, these grid percentages, you can set how much it is from one grid to the other grid. Yeah, what actually happens is each of these grids, suppose the robot actually, okay, the market is moving. Okay, let me choose another color over here. Market is moving, and then it touches this particular grid. So the robot will buy at this price. And then what actually happens is we can take profit at a certain level. So we say we want to take profit at 1%. Suppose the market goes up above from here to here, from where it bought is 1%. So this particular position can be sold off separately. This position can be sold off separately. So in grid board, what it allows us to do is selling off that particular position separately. Then what happens? The market actually goes down again. Yeah, suppose the market goes down. And once it touches here, the robot buys again. Yeah, in grid. Okay. And then the market goes down further. Robot buys here again. And then the market goes up by whatever percentage we want to take profit, yeah, 1%. So this portion is now sold off. This portion is saying this portion can now be sold off. Can you guys see that? Yeah, grid board allows each of that particular grid to be sold off separately because it takes each of this grid, yeah, as a separate position. Each one of this is a separate position. Yeah, that is a grid board. You guys understand? Yeah. So in ROYALQ, we call this bins. Each one is a bin. Yeah, it's like a bin. You know what's a bin? Yeah, a place where we put stuff. Yeah, bins. Yeah, exactly like that. So in ROYALQ, each of these is called bins. In exchanges, it is called grids. It's all the same thing. Yeah. Okay. This is grid trading. You guys understand a little bit about grid trading right now? Guys, you guys understand a little bit about grid trading? Yeah. If you could follow what I just did, please give me a thumbs up. Yeah. Please give me a thumbs up. Okay, very, very good. Lovely, lovely, lovely. So here is the thing, guys. Here is the thing. In ROYALQ, we have another function. We call it sub-bin mode. I'm going to touch that right now. So we know we have Martingale. Our robot can behave pure Martingale, and we can also enable the sub-bin mode. Martingale 1, 2, 3, 4. So the 4 layers, yeah, Martingale, and then beyond the 4th layer, it can behave as grid. 5 and above, yeah, 5 and above, it can behave as a grid. Now the thing is, every time that particular bin or grid is actually sold off, yeah, what do we do? What do we do with that profit? What do we do with that profit? Yeah, the thing is, when this is sold off, you can actually choose to take the profit as revenue, that is sub-bin mode real time, or you can use this profit to put it back into the average price, reducing the average price so that the whole warehouse price actually comes lower. We can also do that. That is called sub-bin mode. This sub-bin mode is highly usable when you want to focus on close positioning. You want to close the position, it's highly used for closing positions. Sub-bin mode real time is when you just want to take profit and you want to go long term. Yes, sub-bin mode real time. But for me, I would like to use this whenever I want to close position because I'm always attempting to bring the average price closer to the current price so I can actually sell everything off quickly. You guys understand? So our robot here, Martingale, grid plus sub-bin, hybrid, super powerful robot, ROYALQ. All right, you guys understand that? If you have any questions, feel free to ask. Any questions so far? Any questions so far? All okay? All good to go? All good to go? Now, let me call upon Leader Kabanda. Want to add anything? Dollar cost averaging, Martingale, and grid.
Wow. I think this is what we had to start with ROYALQ, because now, let me first go back to my friends who are in floating loss, all right? With the knowledge we have so far, you understand, thank you so much, Mr. Robert. With the knowledge we have so far, you understand that the robot, once it buys the first 4, it will sell at once. And once it gets into 5 to 100, whenever it buys, can you imagine? It reduces the total average price and it creates its own average price. How perfect is that? And if you put in the sub-bin mode and you are on floating loss of any coin, whenever it will sell, you always bring your average price closer to the current price, which will make sure that everything now will be sold at once and you're out of the trade. So basically and purely, this means that any floating loss that you are suffering from, you can overcome it. As long as you have the will to be patient and set your robot right. I believe one of the things that makes ROYALQ an amazing robot is that now still you know that even if you're on floating loss and you want to make some profit, you can go directly to that coin you are having, open more margin calls and say, right, I want my robot to keep buying and selling. Then you put in the sub-mid mode your time settlement. Then it keeps on buying and selling, and giving you money in your exchange. What could limit you is your capital. But if you work on managing your funds right, then you can keep trading. Thank you so much. Really, this defines the robot. It makes it a peculiar one that everybody all over the world must use. Thank you so much.
Thank you so much, Leader Kabanda. I want to add on another thing. Yeah, this is an add-on. Okay, I just want to add on this information. So hopefully this also benefits you guys. Yeah. Okay. When we are setting up our layers, I want to share this. I want you guys to really understand this. When we are setting up the layers, remember when we are going for our Martingale and our grid board setting, we have multiple layers, correct? Yeah, layer, we call it margin calls, correct? So we have layer 1, layer 2, layer 3, layer 4, layer 5, layer 6, so on, right? Whatever layers that we have. And then we also have the multiplier, okay? Multiplier. And we have the percentage, okay? Percentage. And we will say buy at whatever percentage here, buy at whatever percentage. We'll add on that percentages. I want to talk about this multiplier because the key difference here is the multiplier. If you get this right, it's helpful. If you don't get this right, you will be stuck in floating losses for the longest time. Now, multipliers means every time we are buying, the market is going down, we are buying. How much are we supposed to buy? Okay, I'll tell you how to do this. Yeah, there are various ways to do this. Okay, there are various ways to do this. Let me just erase this. Okay, there are various ways to do this. The best possible multiplier, the best, I have tested this so many times. The best possible multiplier, we call it the double up. Okay, double up. Double up is the best. That means your layer 1 is 2, then it's 4, then it's 8, then it's 16, then it's 32, then it's 64, then it's 1 to 8. Double up is supreme, the best. You can never beat the double up. The double up works supremely well. Every time you're buying more and more and more, you're doubling it up. Your floating loss, okay, will actually be less, will be, not to say less, will be very close to the current price, very close to the current price. But then again, the problem with this is it's always about capital management. You need a lot of capital. Definitely, if you're going to go for double up. For those with enough capital, double up is superb. Pretty much all the time, you'll come out of your floating losses all the time. Now, the second method, I call it Fibonacci. Okay, Fibonacci. In Fibonacci, it goes like this: 2, 3, 5, 8, 13, 21, 34, and so on. How do you calculate Fibonacci? It's very simple. This plus this, you get this. 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 Now, the key thing about doing this right is every time you buy, you have to buy more than the previous buy. That's the secret. When you buy, you have to buy more than the previous buy. That's how it works. Okay. When you're using Fibonacci, the floating loss at each buy will be slightly higher compared to double up. The third way, when you're talking about your multiplier, we call it +1. +1 goes like this: 2, 3, 4, 5, 6, 7, 8, 9, 10, and so on and so forth. It is still you're buying more and more each time that you're buying, but the floating losses could be a little bit more higher each time that you buy. And here is the clincher. And to be honest, we've all made this mistake. This is the absolute worst. 1, 1, 1, 1, 1, 1, 1, 1, 1. This is the absolute worst. Each time you buy, each time it buys, your floating loss gets bigger and bigger. Each buy, your floating loss is bigger. Each buy, your floating loss gets bigger. And if you are at 60 layers, you're going to end up with 50 to 60% floating. That's the secret. I hope you guys can understand this. Okay. How was that, Leader Kabanda? Leader Kabanda, are you still there?
Yeah, I'm around. I think you have simplified this robot too much. And I believe now everybody is super excited, because if one of the challenges when we started the business is that at first I was scared, because you see, when you go to the robot itself, it has its default settings. You know, sometimes when I was trading, because I never had the knowledge, my upline told me, just sync the strategy, just sync the strategy. And when I synced this strategy, I was understanding what these guys were doing. And within a few minutes, I saw my money is out. And I feel like this is not good business. Let me go and I use the robot automatically. Then I tapped on it. Few seconds, everything was out. But if someone looks at the layers, how many layers do they want to buy? And they look at the multiples you are talking about right now and says, according to my capital, I'm good with doubling up. According to my capital, I can use the Fibonacci. I keep on increasing whenever the market keeps, I keep on buying more. Then that says, okay, I will use the 1-1 method, although it does not affect the average price. I'll comfortably be buying something whenever things get cheap. So now it seems that our people that are on this call will now go use their robot, depending on the understanding of how this robot works, right? And manage their capital well and be able to enjoy the trading without emotions. And this strategy brings out the correct information that this is robotic trading, because the robot will listen to your instructions. So really, thank you so much. If someone adds up from where we started from, why we trade, then gets to understand the type of a robot we have, then gets to know what is floating loss. Because if you are using this method of the layers and you understand that why floating loss, I'm floating, but if I buy more using the dollar cost averaging method, I will be bringing the average price closer to the current price. And the more I buy, it gets closer and closer. And if it is in the grid, in the sub-bin, it keeps on also helping me to bring it closer. You know, in the sub-bin mode, it brings it closer, even with my dollar cost. I have never seen something like this. You are using dollar cost averaging method. You are buying more, but also the robot has a system that is still helping you to bring the average price closer after selling one of your layers. So this is really, really so nice. Thank you so much. I really appreciate personally.
Thank you, sir. Thank you. Thank you. It's a journey, guys. I'm honestly speaking with you. 18 months ago, I didn't know any of this. I was a fool. 18 months ago, you know, I really didn't know a lot of the stuff. It was all through experimentation, getting hit, getting whacked. But the only thing I knew was that the robot will work. The robot will work. And yes, once we understand that, it's amazing. Okay, we have covered 8 topics so far. Why trade? What is quantitative trading? What kind of robot is ROYALQ? Why trade in spot market? We did that. What is floating loss? Why and why you don't have to worry about it? I hope that is very clear for you guys. We did DCA, dollar cost averaging. We talked about the Martingale strategy. We talked about grid bots. Yeah, we also talked about how to go about with the multipliers and such. Capital management, that was extra. Yeah. Now I think we are ready to go into topic number 9, the difference between USDT, BTC, and ETH markets.